Global. Tom, great to see you again. Good morning to you.
Yeah, great to see you, Carl.
So do you think we're working our way through this sort of supply chain inflation uncertainty?
Yeah, I think there is signs that we're at the beginning of the end of sort of clearing up the glitches. I think opening the ports 24 hours a day obviously is a great first step. And in many ways, as you know, when markets sort of see things as less bad, that's good. And it really does change sort of the longer term risk of, hey, are prices permanently higher because of shipping costs? And so, yes, it's good news.
To what degree do you think it pertains to tech in particular? If COVID, and certainly in some troubled states, as you pointed out, continues to fall, does the shift of goods moved further into services, and does that leave goods and tech, or at least hardware, vulnerable?
Yeah, it's a great question. I mean, because we don't know what the post-pandemic world looks like, and as cases retreat, that's what we're going to start to see glimmers of. I think from a demand perspective, any technology company and work from home that had super normal demand last year is certainly going to see less demand. But let's say from an equity perspective, the other side of the equation is really relative valuation. I just don't think technology stocks are that demanding right now. I know even people talk about the concentration of the top five and their relative market cap, but if you look at net income share of tech and even the top five, it's actually among the highest it's ever been in the last 30 years. So I would say tech is still very reasonably priced here, and I think it can really perform even with inflation.
And Tom, how does the worker shortage play into this? I mean, we were just talking about the ports, but then there's the question of who's going to be driving the trucks to take all the products away from the ports. So how does the worker shortage impact your outlook on the economy in general, and particularly tech?
That's another, from a market's perspective, it's obviously another uncertainty because there are so many job openings and so few applicants available. But the BLS has a great series that shows how many people monthly are actually out of the workforce or staying home because they got to care for somebody with COVID. It's about 4 million a month. I mean, that's 10 months of jobs growth. So I think that there is actual shortage of labor, not, partially because people are afraid to go back to work or are uncomfortable. But I think another part is a practical issue. People have to be quarantined or take care of someone with COVID. So I think that as cases improve and as COVID hopefully becomes endemic over time, I think these start to ease, and I think the labor shortages ease.
Hot week for Bitcoin. Tom, you still think it hits 100,000 year end?
Yes. I think Bitcoin is still really strengthening, the narrative around both store of value and protection against inflation and also against, state censorship. So those are really the three things that have attracted people to owning something like Bitcoin. And because it's a network value asset, and its value grows exponentially, I think there's more people falling into that camp. So yes, I think 100,000 is possible before year end.
This is a tech show, Tom, but you have consistently called energy a fat pitch. And I wonder how you balance some of those classic reopening trades with the ongoing demand for tech, and as you point out, making up such a large part of the indices.
Yeah, Carl, it's a great question because it almost seems like I'm trying to talk about two different story arcs, but I think it's actually a great hedge because, energy is really the place where we're seeing the greatest structural shortage, and price has to adjust to reflect that, and energy stocks, which are so under-owned, need to adjust even greater. So, I mean, as we've said, we think energy could maybe even double this year in price. But on the flip side, if I had to think about where investors' mindsets are and the uncertainty of supply chain glitches, inflation, labor costs, all of these are actually tailwinds for demand for technology because the biggest cure for wage inflation is technology. So I think technology is still a great place for investors with the right time horizon to be buying here.
Well, with that in mind, Tom, as we look at the NASDAQ up 200 points, do you think there's going to be a divergence between the different categories of tech stocks? I mean, tech is now such a massive category. And if you look at the difference between, e-commerce and cloud companies and social, how would you draw the lines? And is there one piece of this industry that's going to be outperforming or dramatically underperforming the rest of it?
It is I mean, tech is huge now, right? Because it's the largest sector weight in the S&P, but also, the largest contributor to really GDP growth in the U.S. and globally. I mean, to me, the themes that are really rock solid are the productivity that comes from technology investment. So it is still going to be a lot of software, but I think that also means infrastructure. So I think a lot of the industrial like technology makes a lot of sense. I mean, cloud we know is a great sort of long-term story, but it is there. It becomes valuations quite challenging, and also, it's a really widely known and well adopted. So I wouldn't say crowded, but it's not like there was necessarily positive surprise. And then I think, FANG to me was consolidating this year. But if you look at the history of FANG stocks, they essentially have PE derating every other year. So this is the year that they're derating. So next year, I think you get the benefit of FANG having both great earnings growth and the probability of multiple expansion.
Fascinating. I mean, I love that. I love that bridge between tech and energy, Tom. You've been pointing out all week sort of how gasoline, for example, is a smaller share of wallet than it was 14 years ago. And a large part is because you don't have to drive everywhere. You can always Zoom. Tom, thanks. Good to see you. Tom Lee.
Thank you.